Hello, friends. Once again, I'm back with another video. So today we are going to be talking about 50 minutes order blocks. So basically, for these order blocks, we are going to be identifying them on a 50 minutes time frame. So this is one of my best intraday time frames for trading. So stick around, stick around. And the main emphasis today is it's going to be on breaker order blocks. Like if at all we identify any other, we shall see, but these are going to be the most common, and for me these are the ones that I use the most. So now let me first illustrate something here mechanically, you get. So the mechanical approach for this, we are going to first illustrate what I'm going to first illustrate what a bearish breaker order block is, you get, or a bearish order block, you get. So now uh, if at all the market has been moving in an upward trend, you get, it expands. This is an expansion. This is a retracement. Expansion, retracement. And now when we come in a retracement and then displace lower, you get, when we displace lower like that, when the market displaces lower, it means we've got a market structure shift, which I talked about in the previous episode. So now this is our market structure shift. So at when we get this shift, you get, it means now, it means this was a manipulated zone, you get. This is a manipulated zone in most cases. Now if at all we expanded lower, it means that our bias shifts. Now you get, we've gotten a shift. It is most likely that the market is now going to start selling, you get. So which means which means now if at all the market has been moving up, we are going to expect moves like that, you get. When we expect expansions going lower, before expansions we're going higher, you get. So now we got an expansion lower, it expanded lower. So now which means for order blocks, they are going to be associated with expansion, where the market is expanding towards, you get. If at all the market expands towards the lower side, so then we know the market movement involves retracements, you get. It involves retracement. So when we retrace, that's when we are going to be targeting these order blocks, you get. We target these order blocks so that we continue lower, you get. So now that's it. Now I think let me just go straight on the charts. That's a simple illustration. When I come on the charts, because I don't want to take so long, when I come on the charts, then I believe you'll understand better. So now remember, there is something really important in trading. Always identify the most recent draw on liquidity. So you can see that the market here took out sell side liquidity, you get. Sometimes this is one of the starting points, you get. It's one of the starting points. We took out sell side liquidity, major sell side liquidity. And now the most important thing, now we can see that we got a market structure shift, as you can see over there, you get. We got a market structure shift. So now we can see what I was trying to illustrate. Now this run that went down, you get, this run that went down, this run that went down, we believe this was a manipulation, you get. They were taking out liquidity. So this was, these candles here, they had bullish orders inside, you get. Much as they were moving lower to buy, you get. Market makers moved the market lower to buy. So now in an expansion we are mostly interested when we see a market structure shift with fair value gap. So we can see that we have a fair value gap over there, you get. And then we also have this fair value gap over here, you get. We have a fair value gap over there. So this is our expansion. We have our fair value gaps, but now we are interested in these order blocks here. So now, yes, this was the whole of this area. I can call this to be an order block, you get, the whole of that area. But then we have to refine it, you get. We have to refine it. So now we mostly consider the full bodied candles, you get. So now if at all we are in a bullish market, you get, now we are looking for bullish, given that, by the way, given that the market was moving lower, sorry, I'm a bit rushing. Given that the market was moving lower like that, so now when we get a shift, it means now we are looking for bullish order blocks, you get, which are going to push us higher, you get. So now that's it. Now We got our shift there, we got our shift in market structure there. So now we start to target these order blocks, you get. So now here we highlight bullish candles, you get. Yes, much as we have bearish candles that we're going, but now to refine, instead of highlighting this whole area, let me show you. Instead of highlighting this whole zone like this, you get, let me, this whole zone, you get, we can simply refine it to this to this to this bullish candle, you get, because now we are going to buy, you get, we are going to buy, so we refine it to the bullish candle. That's one of the steps that we use. Now in this bullish candle, this is a bullish candle, but then we have a fair value gap inside there, you get, we have a fair value gap. So this one becomes one of the most concrete the most concrete confluences that we can use, you get. So now this one becomes our entry zone. This is a zone, you get. So now where do you place your entries? It's one of the next questions, you get, where you place your entries. Now sometimes there are many conferences, there are many things that we can consider. In most cases, one would consider entering at the neckline, you get. You consider entering at the neckline, and then where is your stop loss? Where is your stop loss? Now there are many there are many I may consider that to be my stop loss. So sometimes, if at all you cannot withstand the wide stop loss, you give up on the trade, you get. So I may consider that to be my stop loss, or even lower. So now I place my long position here, you get. That is my point for going long, you get. So stop loss just there, just below here, you get. And now what am I targeting? I'm targeting this high over here, you get, the most recent high, targeting the most recent high. So if at all you determine that your account cannot hold this stop loss, please do not take the entry, you get. So that's it, you get. So the market, we got a market structure shift, and then for me I can determine this to be even a change of character, which was another confluence, you get. So as the market returns back, they pick up your order, you get, they pick up your order. You went in a little bit of drawdown, and then the market expanded higher, you get, the market expanded higher. The same thing happened here, you get. If at all we see something here, so the market took out this high here, as you can see, and then we got a shift, you get, we got a shift in market structure over there. So now we consider this whole range, you get, this whole range up to here to be an order block, you get. So sometimes you don't have to limit yourself, you don't have to limit yourself that one, because that to only one candle. So that is our order block. But now we are going to refine even on the same time frame, on the same time frame, that where we are taking, where we are considering the order block, like we are analyzing on the same time frame. We are not even going lower, but then we can even be able to take our entries without going into a big drawdown or a loss, you get. So if at all these are our order blocks, you get, these candles here. Now, case for bearish, we consider the bearish candle. It's one of the ways we start to limit, to refine, you get. We may consider these are two bearish candles here, you get. So yes, it was a bullish run, and then we expanded lower, so we can highlight those ones over there, you get. So now this is our entry zone, you get. Remember, we are not considering, we are only considering, let me first edit this. We are only considering this move that caused the market structure shift, you get. So now if I can just move a little bit lower, you get. So if at all we are to consider that this is our market structure shift, and now here is our entry point, you get. here, that is our entry point. Let me just zoom out a little bit. If that is our entry point, remember we have to also identify our target and we assess whether it's worth it. You get? We assess whether it's worth it. Now, the most realistic target, first of all, would be this liquidity. You get? Opposing liquidity. You get? That could be our target one. But remember, you can also target a, or you can aim higher. This can be your target too. And then this is like a range. I can just target off that lower there. You get? So this entry was giving us two targets. The most concrete one that I always like, take profit point number one, would be just this liquidity, or we can go for more liquidity downwards. So now we've identified where to get in and our take profit point. So as the market shifted, it returns back. You get? It returned back. Now that would be my entry. This is TP1. You get? That is TP1. Now, or you could target there, you get, and go lower. Sorry. And go lower. This is what I wanted. That's our entry. Then this is target number 2. You get? So that's target number 2. And now stop loss is one of the most important thing. So I can put my stop loss just above these highs. You get? Because it's not far. You get? That's just above there. That is the high. So I can just put my stop loss just slightly above. You get? Slightly above. So I believe you can see. So if I told you repeat this very, very, very many times, you get? Very many times, trust me, you're going to get entries. You get? You're going to get entries. We expanded lower. So even here, we can see we took out buy side. We took out, we got a shift there. You get? We got a shift there. But now, here, the market didn't come back within our zone. We gravitated lower. But then sometimes in future, I'll be showing you how I would be mostly targeting. This was all internal structure. You get? This was all internal structure. Now this was the major low, this point here. You get? That was the major low. So which would be mostly targeting. So when we broke below, you get, we can target this zone here. You get? This zone here. The whole of this zone becomes the whole of this move. Let me show you. The whole of this move was it's like another block, but this was an Asian session. So maybe I'll be talking about sessions later. You get? Sometimes if I told you we were targeting here, we would have a missed entry. If I told you targeting there, you get? If I told you targeting that, you'd have a missed entry. But now, the most realistic one, given that this was a whole range, we can target the area of resistance. You get? We can target the area of resistance, and now you can take your entry there, and then your stop loss is above. So you have to determine whether you can sustain this drawdown, like if being in drawdown for all that long. You get? And then you're targeting some lower POI. So now the most challenging thing, it would be possible for us to get in early here, but now given that we're only considering one time frame, if I told you are only on one time frame, and then it's the one that where you are even taking entries, it means sometimes you may have missed entries. You get? So it's good if I told you apply the same concepts on a higher time frame, let's say the H1, and then you go lower, you identify zones on H1, then you go lower on small time frames like M15 and M5, so that you can see those shifts. You get? Because if at all I have a zone, for instance, let me show you something here. You get? If I have a zone, you get? If I have a zone, for instance, I was targeting, let's say, this sell side liquidity, you get? And now the market takes out that sell side and then it returns back, you get? let's say I have this whole order block here, you get. So if at all you go on like M1, you get, on M1, as the market returns back, you get, you'll be able to see something like that, a shift, you get. You'll be able to see those shifts early enough, you get. So a top down analysis would do better for you, you get, would do better for you. So for now, I wish you the best. In the next episode, we shall be talking about advanced market structure, and then still the concept that I've talked about, the order blocks. You get, they are going to be so important. So I brought it on purpose because still it's going to help me as I'll be explaining in the next episode. You get, so stick around. If at all you like the content so far, please endeavor to subscribe, be part of this.